안녕하세요. 미국주식으로 은퇴하기 미주은입니다. 새로운 한 주가 시작됐습니다. 지난 주말 의미 있는 시간, 생산적인 시간으로 만들어 가셨으리라 믿습니다. 저는 일단 미주은 책 2탄의 진도를 조금 뺐거든요. 그래서 나름대로 의미가 있었던 주말이고요. 지난번에 한번 말씀드린 것 같은데 저는 주말 저녁에는 우리 아이들과 함께 영화를 꼭 시청합니다. 집에 넷플릭스 그리고 디즈니 플러스를 모두 구독하고 있기 때문에 매주 좋은 영화들을 접할 수가 있거든요. 어제 저녁에는요, 윌 스미스 그리고 윌 스미스의 아들이 주연을 하면서 좀 화제가 됐던 영화가 하나 있습니다. 한 10년 정도 지난 영화인데요. The Pursuit of Happiness라는 영화, 한국 제목으로는 행복을 찾아서라는 타이틀로 나와 있더라고요. 이 영화를 가족이 함께 봤는데요. 사실 경제적인 어려움, 경제적인 문제로 인해서 가족이 뿔뿔이 흩어지고요. 또 월세를 낼 돈이 없어서요. 싸구려 모텔로 이렇게 쫓겨나는 삶의 아픔이 진하게 느껴지는 그런 작품입니다. 그래서 저는 솔직히 영화가 조금 어려운 것이 아닌가 우리 아이들한테 이렇게 걱정을 했었는데 우리 8살짜리 아들이 아주 푹 빠져서 감정이입을 하더라고요. 그러면서도 이렇게 사람들이 돈이 없어서 불행해지는 모습을 보면서 조금은 이제 혼란을 느끼는 그런 제 아들을 봤습니다. 저 역시도 같은 가장으로서 영화 속의 주인공이 느끼는 그 고통을 많은 부분 공감할 수가 있었는데요. 그러면서 생각한 것이요. 참 아플 만큼 고통스러울 만큼 경제적으로 힘들지 않다는 것이 얼마나 다행스러운 일인가라고 함께 생각을 해봤습니다. 아무쪼록 미주은 패밀리 분들 중에서는 경제적인 문제 때문에 이렇게 아픔을 겪는 분들이 없으셨으면 하고요. 그리고 꼭 모든 분들께서 미국 주식 투자를 통해서 풍요로운 은퇴 생활을 함께 만들어 가셨으면 하는 간절한 바람이 있습니다. 그럼 우리 모두가 미국 주식 투자로 은퇴하는 그날을 상상하면서 2021년 5월 10일 오늘의 미국 주식 뉴스 바로 시작합니다. 오늘 보내드리는 미주은 방송에서는요, 캐시우드 특집 영상을 준비했습니다. 지난주 금요일날 Cnbc에서 캐시우드와 단독 인터뷰한 영상을 제가 시청을 했는데요. 이번에 영상 보면서 느꼈던 점이 이번 인터뷰를 진행한 뉴스 앵커들 있잖아요. 이분들이 아주 마음을 굳게 먹고 투자자들이 궁금해할 만한 질문을 많이 던졌습니다. 최근에 여러분들이 가지고 계셨을 좀 고민스러운 부분들이 있잖아요. 이런 부분들이 어느 정도 좀 커버가 되지 않았나 이렇게 생각을 해봤습니다. 이번 인터뷰의 주요 내용을 잠깐 언급을 해드리면요. 첫 번째로 현재 그 성장주들이 많은 조정을 받았는데 이러한 상황에 대해서 캐시우드는 어떤 생각을 가지고 있는지 그녀의 평가와 의견을 한번 들어보고요. 두 번째로 아크 인베스트에서 현재 자금이 많이 이탈하는 중입니다. 그래서 많은 자금이 빠져나가고 있는데 과연 아크 인베스트에 투자하고 있는 분들의 돈이 안전한가? 이 부분에 대한 질문이 또 나가고요. 세 번째로 최근에 새로 론칭된 ETF가 있잖아요. 스페이스 이노베이션 ETF라고 ARKX죠. 이 ETF에 대한 비판이 좀 있습니다. 먼저 아크의 다른 ETF가 안에 들어가 있거든요. 그 3D 프린팅 ETF가 ARKX 내에 편입이 되어 있습니다. 그래서 이 부분에 대한 이유 그리고 그 논리를 한번 들어보고요. 두 번째로 넷플릭스처럼 좀 관련이 없어 보이는 종목들이 많이 들어가 있다. 이 부분에 대해서 캐시우드의 해명을 한번 들어볼 수 있는 기회를 마련하게 됐습니다. 그리고 이제 하나 더 중요한 부분은 이제 테슬라죠. 테슬라 그 오토파일럿이 최근에 이제 사고에 좀 관련이 되면서 안전성 문제가 대두가 되고 있잖아요. 그리고 또 웨이모 아니면은 GM의 크루즈 같은 기업이랑 이제 경쟁을 하고 있는데 이런 경쟁에서 과연 이겨낼 수 있을지 여기에 대한 캐시우드의 전망도 들어보고요. 또 중국 내에서 테슬라의 입지가 좀 많은 어려움을 겪고 있습니다. 그래서 중국 내에서 이렇게 겪는 어려움에 대해서 해결책이 과연 어떤 것들이 있는지, 지금 테슬라가 어떠한 방법으로 중국 내 그 시장 점유율이 떨어지는 것을 타파하고 있는지, 이러한 질문도 답을 들어볼 수 있고요. 그리고 이제 다섯 번째로 언급된 부분이 이제 성장주인데요. 도대체 왜 아크 인베스트, 캐시우드는 꼭 성장주에만 이렇게 집착을 하는가? 최근에 경기의 회복 모습이 보이면서 많은 투자 기관들은 사실 다른 투자처로 많이 이동을 하고 있잖아요. 경기 민감주라든지 아니면은 뭐 제조업이라든지 이렇게 좀 최근에 좋아 보이는 분야로 많은 자금이 이동을 하고 있는 상황인데, 왜 캐시우드는 계속 성장주에 집착하는지 여기에 대한 대답도 들어볼 수가 있습니다. 그 밖에도 뭐 줌이라든지 아니면은 그 트위터 이런 종목에 대한 자세한 투자 의견 평가도 들어볼 수가 있습니다. 하여튼 굉장히 알찬 내용이 많이 들어있는 그런 인터뷰니까요. 꼭 마지막까지 함께 해주시면 고맙겠습니다. 자, 오늘 영상에서 제 목소리는 여기까지고요. 자, 이제부터는 캐시우드의 인터뷰 풀 영상을 함께 시청하시도록 하겠습니다. 저는 오늘 전해드리지 못한 미국 주식 뉴스까지 함께 포함해서 내일 굉장히 알찬 내용으로 많은 뉴스 여러분들과 함께 읽어보도록 하겠습니다. 우리 모두가 미국 주식 투자로 은퇴하는 그날까지 다 함께 화이팅입니다. 행복한 하루 되세요. 감사합니다.
Kathy Wood joins us now in an exclusive interview. Kathy, good afternoon. Thanks so much for joining us.
Happy to be here, Wilfred. Thank you.
Let's touch, if we may, on this sort of current pullback. Do you actually welcome that as a long-term buying opportunity for a lot of the stocks you love, or are you feeling the heat a little bit?
Oh, I love this setup. The last time I was on, I think I said that this rotation was good news because it meant the bull market was broadening out. It was strengthening. And the worst thing that could have happened to us is to have the market narrowly focus on just our ilk of stock, the innovation space. Instead, it has broadened out so that year to date, I think it's energy's up 40%, financials are up 27%. And from the peak, in mid-February, our strategies are down. The ones that have been hit the hardest, not all of them, are down 30 to 35%. I love that setup. From our point of view, 5-year time horizon, nothing has changed except the price, and therefore the return, which at the peak of the market and of our strategy in mid-February, we expected a compound annual rate of return of 15% on average per year from our strategies. Now that the prices are down, that number is somewhere in the 25 to 30% range.
You may love the setup, Kathy, but it hasn't been great for your business. I mean, worst start to the month on record. You've seen outflows of $1 billion. How are you managing these declines? And there's speculation out there that if the outflows continue, it would be hard to meet redemptions.
No, well, first of all, I don't have to worry about redemptions. ETFs, the ETF ecosystem is a beautiful thing for portfolio managers. I highly recommend it. So what that means is when I am making decisions, they are investment decisions. I have nothing to do with the flows. The ETF ecosystem, the authorized participants, the market makers outside of ARC, although, of course, we're overseeing their actions, they are facilitating our flows. And they're doing it in many ways with algorithms and derivatives. I think the ecosystem has become quite profitable for them. So we have experienced no problem. If you look at our spreads, there's been hardly a disturbance in our spreads. As far as flows, actually, we've been very gratified. I think if you go month by month now, this is endpoint to endpoint, we have not seen a month of redemptions yet. I would be... I don't want to say never. I mean, of course, we're going to get redemptions. And in fact, in the ETF structure, when we get redemptions, because of the in-kind nature of redemptions, we are able to offer a much more tax efficient strategy or portfolio in this wrapper than we ever could have in a mutual fund.
Kathy, I wanted to dive into a couple of some of the talking points people have put out in the last couple of months. And the first one is what you would say to those people that have criticized the way in which you've held your own ETFs within one of your other ETFs. Do you accept that in the least that's not an ideal thing to be doing?
Well, this is the 3D printing fund within the space ETF, ARKX. Because 3D printing is one of the killer apps, in fact, the killer app, is aerospace, including space. We felt it very important to have a good smattering of 3D printing. Now, 3D printing is a smaller cap space. And so we felt that because it was so important that we would put it in our fund. However, our clients are not being double charged. That comes out. We do not charge them double fee. Instead, they have a very well diversified participation in 3D printing, which I think as more and more people understand how important it is going to be to aerospace, not just rockets and satellites, but also airplanes, including the engines. I think they'll appreciate why we own 3D printing and wanted to own it in size.
Whether it's the 3D printing ETF within the space exploration and innovation ETF or a couple of the other holdings in that space exploration ETF, like Netflix, like Deere, should that ETF be called just the innovation ETF? I mean, is the space exploration part of it at the front of its title, the lead part of its title, a little bit misleading?
No, not at all. In fact, what we believe, and comparing and contrasting to the other offerings out there, which have satellite radio, satellite TV, the old world, we believe the next frontier here, where there are real money-making opportunities, is not space tourism. It's going to be a very small market in the short term. It's two markets. Mobile connectivity. There are 3 billion people around the world who have no access to Netflix, broadband, and the internet. And the satellites that SpaceX and others are putting up there now are going to give those people an opportunity to become a part of the Netflix family. So we think Netflix is going to be a huge beneficiary. Deere is probably, because of its name and everybody knows it's tractors, they think it's old world, old DNA. For a more industrial company, they're one of the most progressive companies I've seen embracing technologies. Now, farming is going to become much more efficient. The productivity gains are going to be enormous as we start using drones to identify exactly how much fertilizer is needed, where. So I think that drones and some of the connectivity from a weather point of view, they've done for years. They bought a company from Monsanto to focus on the weather and how weather patterns would affect farmer productivity around the world. So I think autonomous farming is going to demand drones, satellite information, and so we think it's going to be a big play.
I guess the other factor I'd just throw in as well, that you remove limits on investing more than 30% of assets in a single firm and more than 20% of a single firm's shares, as well as some of those other factors that we mentioned. And I guess just bringing it all together, the broad question I had is whether, because of your fantastic inflows, it's a great problem to have, whether you grew a bit too fast for your investment universe, for your ilk of stock, as I think you said earlier in the interview, and whether at any point over that period, the last 6 months or so, you did pause and consider thinking, maybe we should stop allowing more inflows and close the ETFs, close the funds, rather than launching more ETFs, raising limits, buying your own ETFs within your own ETFs, and whether that was a question you at least asked yourselves over this massive inflows.
Well, it's not possible to close an ETF, unlike a mutual fund. So that's
it's not impossible, though. I mean, you can change the rules of the game somewhat.
I do not think it's possible. I think the regulators would have a big problem with that, the way they've set the structure up, especially because of the way ETF flows are handled. Really, that's not within one firm like ours. There's a whole ecosystem around us. We went from 10 billion to 80 billion in 10, 11 months. That was pretty parabolic. And of course, we were very grateful for those flows, and we're still grateful for the flows we are getting. But that's parabolic. We are used to exponential growth. That's what we do. Our strategies, our innovation platforms, we believe are going to scale exponentially, and therefore our capacity should scale exponentially. 10 to 80 billion was a little faster than that. And so we've taken risk control measures so that we do not own too much of one stock. And you'll also see we've seen an explosion of IPOs around innovation, secondaries, SPACs are all about innovation. So we are getting more and more opportunities to scale with these newer companies participating in the innovation space.
Kathy, I wanted to talk Tesla, one of your favorite stocks, because that's part of the performance issue. It's off 25% from the highs. And there's some real questions right now about the reliance on autopilot and whether that has led to some deaths. You have been super bullish on Tesla's autonomous future and the vision of robo-taxis. Isn't that problematic, given some of the concerns here around safety?
Actually, I think we've gotten some very important information recently that Tesla is seeing its way through, so to speak, to autonomous. And that is, they've decided to take radar out of the ecosystem and just depend on vision, computer vision, CV, so 8 cameras. I think they're getting much closer. And, as far as autonomous, when anyone talks about safety in an autonomous vehicle, they have to consider the alternative. The alternative is human-driven travel. Humans are responsible for 80% plus of all fatalities in automobiles. And so autonomous is going to really take that issue away from us. So we think that we're much closer than most do. We think we're probably not as close as Tesla thinks it is. But we do think within the next 2 years, we're going to see some really surprising breakthroughs from Tesla. We've been watching Waymo and Cruise Automation here, and we think they're probably struggling with how to scale that business. We think Tesla is going to go autonomous at scale or much more quickly than any of its competitors.
And then there's the China issue. They seem to be really clashing with customers on social media, the public, and the government. What do you think is going on there, and how much of a risk factor is that for the stock and the business?
Well, we do think that that China wants its locals to win. We saw, I think just in this week, NIO, because of the battery swap system it has, no matter what it's pricing its cars at, it's going to get subsidies, whereas the Model Y will not get subsidies in China. So there is some favoritism for locals. But we found something out very interesting this week. If you look at the drop in share of Tesla's cars in the electric vehicle space in China, what you will also see is an increase in the number of exports to Europe. And in talking to the company, we found it curious. And it seems that the quality of cars being built in China in that super modern factory, the quality is much higher than those being built in Fremont. And we know that the European customer used to beautiful German cars is very particular about quality and design. And we think Texas will be a step up as well. So Fremont's just a very old plant. So it was very interesting to learn that. And so I think that Tesla will manage the issue you've identified and that many are discussing by exporting to the rest of the world. And I think China's going to like that. China has not been a big exporter of autos to the developed world. This will be a feather in their cap.
A lot of your favorite stocks are the classic stay-at-home plays, Teladoc, Zoom Video, Peloton, and investors have soured on them lately. Number one, because it seems like it would be as good as it gets during the pandemic and a big pull forward in a lot of their revenue. And number two, you look at some of these earnings reactions and you've seen some really sharp sell-offs and questions about whether they're overvalued. Why are you sticking with them?
Well, we legged into them as in this period. We had sold actually into the coronavirus because we saw these stocks soaring and many of our others completely misunderstood. So we made some what turned out to be very good moves in terms of their relative appreciation one to the others. And we have been legging back into them in this period because they've been cut in half, most of them. So what you are saying about stay at home and the disaffection with them in the marketplace seems to be getting priced in. And we think these are platform companies. They're for the new world that are harnessing data. And we're in a period now. Many people think we're going back to the old world. I don't think so. Better, cheaper, faster, more productive, more creative we're not going back to the old world. We really, even thinking about digital work, I know at our firm, we're debating exactly what our hybrid strategy is going to be and how it's going to work. But I think Zoom is going to become essential. It is part of the enterprise software stack and technology stack. Communications is the largest part of that stack. And we think that Zoom is going to take a bigger and bigger chunk of that stack. One of the things and from our own experience, we know, Zoom's at its best inter-company. Many people say, well, what about Teams, Microsoft? This is why Slack had to sell out to Salesforce. This is different. Microsoft cannot scale, we don't believe, the inter-company communications. They're very good at intra, and we use Microsoft in-house. But inter, we think that's going to be Zoom's market, and we do think it's going to take more and more of the traditional communication stack, PBXs, for example.
What about Apple? Not a typical ARK stock, but you have owned it in a fund, and I've noticed that you've been selling it, and in fact have halved your position this week. Why?
Yes. What we do as a bull market extends, as it did last year, we usually put into the portfolio, since we cannot hold any cash, we put into the portfolio, I'll call them cash-like innovation stocks. So the FANGs certainly meet that criteria. They're acting like defensives. They truly are. On days when utilities and staples do well, very often communication services are doing well. So during a period of volatility like we've just seen, we will sell those stocks and move into either our more pure play or earlier stage innovation companies that are being hurt by the risk off.
Kathy, you grabbed some attention and news recently by buying into Twitter. Talk us quickly through the rationale, and I guess are you buying more given that it's pulled back again of late, trading it down about $52?
Yes. So Nick Gruce is our analyst on Twitter, and he's been experimenting with Spaces, which is their version of Clubhouse. He loves it and thinks that could do very well. We also think that tipping, and this had been a rumor for a while, they announced it today, I believe, that tipping might become a bigger deal for Twitter than most people anticipate. Might be much more important to their monetization strategy. And as you know, we understand at ARC the power of Twitter. We are pushing our research out through Twitter. It is our most productive social network. It is helping our analysts engage with and become a part of the communities they are researching. There's nothing like Twitter to do that. And I think a lot more knowledge workers are going to be forced into, or lured into, onto the platform for that reason.
Well, Kathy, thank you so much for this extended conversation. As always, it's a pleasure to catch up. Kathy Wood, thank you for joining us.
Thank you,
All
Kathy.
right.